I think something that a lot of people will find interesting is this idea of a power law model. And
Oh God.
I've seen you talk about this
You knew
a
you'd get a
lot,
reaction out of me on this one. Bloody hell. Right? They've actually done a lot more work. The stock to flow model, just for those who aren't aware, is absolute, I can swear on this channel, right? Absolute dog shit. Anybody who supports the stock to flow model, please stop. It's just garbage.
You're talking about this idea of 118x Bitcoin multiplier effect that's been put out there by Bank of America. I would just love for you to share with the listeners your thoughts about it.
Yeah, it's bollocks. Anybody that says 100x multiplier, 50x multiplier is kidding themselves. Now, the power law model has a lot more mathematics behind it, a lot more work going to it. The problem that I have with it is that it's...
Today I'm thrilled because I've sat down with Check. How you doing today?
G'day, mate. It's good to be here.
It's good to be here with another fellow Australian. Now, Check, I think most people are probably very curious in this one question. Where are we in this Bitcoin bull market?
Yeah, absolutely. I mean, it's one of those things. I mean, everyone wants to know, right? When top, when bottom, when buy, when sell. And look, the nature of the beast is, and what I love to say is that no one knows, right? And anyone who tells you that they know is kidding you. What we can do though is get a reasonable gauge and use probabilities, all that shit. Generally speaking, when Bitcoin gets to a new all-time high, which I would say we're kind of flirting with the all-time high because it's it's the same level, but we haven't really convincingly punched through it. So I generally describe the recovery from a bear market. There's 2023 up till about October, which was very much the recovery. It's only the hodlers. There's no new money coming in. Everyone's still got PTSD that we're going to crash back down again. Like everyone's got bear market goggles on, but we just slowly but surely grind higher. Then we start to move towards the all-time high. And that's like the excitement phase. People start to get a bit hyped up. They start to believe it. I believe this was about October onwards. We broke through about 30K, which was the middle ground. And suddenly everyone goes, oh shit, maybe this isn't actually a bear market rally. Maybe this is the real deal, right? Bit of disbelief starts to fade away. But the phase when you get above all-time high, it usually takes some time. This whole process is like excitement into, not euphoria, not quite euphoria, but enthusiasm, right? People start to really believe this thing's going to go higher. That said, once we get above all-time high, that's where you move into the more euphoric phase. And in terms of market structure, the current cycle we're in is very much what I call quiet and trending. We have this nice rally and then it goes sideways and does nothing. Then it rallies and goes sideways and does nothing. You probably experience it. Feels like boredom. Once you get above the all-time high, we move into what I call volatile and trending, where it goes up, but it also comes down quickly. And every single correction, people go, oh shit, that's it. It's over. Right. And it feels like it's over, but it then just goes higher again. Right. So it's this like much more volatile, more exciting, but we're on the cusp of breaking between those two boundaries yet. We haven't actually gone into euphoria yet.
Kind of feels like it could be close as well. I was looking at some charts the other day and it kind of showed like every time we've, touched that previous all-time high in like 2017 and 2020, like we've consolidated for a long amount of time before we punch through it. And that's kind of like it feels like we're doing today. We're just consolidating at that all-time high. But every time you look at the chart after we definitively punch through that all-time high, it punches quickly and it moves really quickly. And
Yes.
like you say, the volatile period actually begins.
Yes, and strangely enough, Bitcoin trades much more like a commodity. So in the equity world, people when they look at the VIX or the volatility index, everyone panics and gets scared because the market's selling off. So volatility spikes when they have sell-offs, and then when it just goes back to that highly manipulated straight line of just going upwards, there's no volatility. Bitcoin is more like a commodity. It's the other way around. We actually have low volatility during a bear market. And this is the great thing when people are like, oh, Bitcoin's too volatile. You show them the volatility charts, like, yes, volatility happens to the upside. When it's volatile, it means it's going up. It actually gets less volatile during a bear market, which is, a lot of people don't realize that. But also the volatility right now is like a third of what it was in 2017, half of what it was in 2021. And, the drawdowns since the FTX bottom, we haven't given back. It was 20.4% is the deepest correction we've had, which was the one we had at 57K. Like most of the time we get 25, 30, 40, 50, 60% drawdowns. We've tagged 20%. So something underneath this is just quietly and patiently absorbing everything that people are going to sell. It's been quite incredible to watch.
Oh, now that's gonna get a little bit. That could get into some rabbit holes there. Who is that buyer? Who is just sitting there buying? Is it just institutions check, or do you think there's some bigger
Yeah, I don't
entities?
know. I mean, yeah, look, I think that so one thing that's been very interesting is that we're starting to get more data about the ETFs, and it's primarily retail. And I think this is great because retail has, strangely enough, in every other market, retail is the dumb money, more or less. And that was definitely true. I was the retail dumb money in 2017 when I bought the absolute Pico top. Many of you probably listening were there with me, right? Bad decision. Nevertheless, the shrimp really learnt. And when I look at the way that the shrimp behave, they stepped in and bought the all-time high in 2017, right? Just went absolutely ham and bought everything. They then learnt, and I've lived this experience, the education from 2017 to now, the high quality podcasts, the fantastic thinkers who are actually like, people understand what they own now. The next time we saw the same wave of retail shrimp level buying was $20,000, except in the 2022 bear market. So rather than buying the top, they stepped in and bought when the narrative was FTX has just killed Bitcoin for the next decade. That was the story. And the shrimp stepped in and bought. So strangely enough, the retail shrimp are actually smart money, and pretending that their dumb money is actually a losing strategy. They sold into the 73K top just the same way that long-term holders did. So the shrimp are actually a smart group, and paying attention to them is powerful, right? And when we see these ETFs are primarily retail driven, the institutions aren't even close yet. We're seeing guys just putting their retirement accounts in, right? Because they believe in this thing. They know what they own. They can see the debasement that's coming. And they're like, well, I've always wanted to get Bitcoin in my retirement fund. Here we go. Or now I can put it in my stock portfolio. Or now I can get my father couldn't buy it and hold it via spot. So he's finally gone, yeah, okay, I'll get in via these ETFs. So there is going to be institutional guys that are just sitting there absorbing coins. But at the same time, we're still in the retail phase, which is kind of interesting because we're not at the hype retail phase. We're not speculators. We're talking about hodlers. It's still hodler territory, with a side dish of, early institutions.
So speaking of smart money and dumb money, the Ethereum ETF was looks like it's just been approved recently. What are your thoughts at like maybe a 5,000 foot level of the Ethereum ETF, and what do you expect?
Yeah, absolutely. And strangely enough, actually, yesterday I released a piece which is all about my Ethereum opinion. And the reason why is that I mean, I've gone down the rabbit hole. I've used all the DeFi stuff. It was a great trade for me back in the day. However, it's just not for me. And the more evidence I see about how the project, it's just not my cup of tea. So over time, I mean, I divested following the merge, and that was it. I'm kind of good with it. Nevertheless, I still find it a fascinating mental exercise because what you learn by watching it's like a friend who's always wrong. When you have a friend who keeps making the same stupid mistakes, you're like, God, I really have come to respect the hard design decisions Bitcoin made. And you have to look at the parallels and really get in the weeds. Like, man, I mean, you can see why Bitcoin is just a better designed piece of software. So anyway, in terms of the ETFs, big picture, they were always going to happen because Ethereum has the CME futures. So they were always going to happen. I think it's actually a good thing because now Ethereum is on equal ground to Bitcoin. They can't say, oh, look, Bitcoin is, got an ETF and that's why the ETH BTC ratio is going down and blah, blah, blah. So they're now on equal footing. And do I really believe, honestly, that the last 15 years of the market sorting Bitcoin to be completely unchallenged at the top is changed because Ethereum has an ETF? Absolutely not. I would be amazed if Ethereum gets more than 10, 20% of the demand we've seen for Bitcoin. I just don't think that institutions have that kind of buy and hold demand. They like to trade it, they don't like to hold it. Bitcoin is a different animal. So do I think it's going to, is the flippening still a thing? Yes, but probably not for Bitcoin.
So you think Solana is potentially going to flip Ethereum? Is that what you're implying there?
I think that the risk of a flippening is not Bitcoin being flipped. The risk of a flippening is it could be anything. And
Mm.
broadly speaking, when Ethereum went to proof of stake, in my view, they actually gave up their primary, biggest, and most important differentiator, which was proof of work. So if in a proof of stake arena, what advantages does Ethereum really have? It doesn't have many, but it does have a lot of technical debt. A lot of these other projects don't have that. And there's a couple of very technical podcasts I've listened to about the EVM versus the SVM, right? The virtual machine that Ethereum and Solana use. And it kind of clicked to me in this one episode. Basically, Ethereum is always going to be a single core computer. SVM is just one example, but it's a multi-core computer. And the moment that that clicked for me, I was like, holy shit, it's really competing against a world of well-funded, lesson learned technology companies who are going to do what it does better. And when I think about Ethereum's market share, do I see it growing? No, I strictly and quite factually, we're seeing users move, we're seeing capital move, we're seeing stablecoins move. Ethereum's pie is measurably shrinking. And, it doesn't matter how many charts you want to look at, big picture, Ethereum's pie is being eaten into. It's in this very unfortunate position where it's not Bitcoin, and it's also competing with a infinite pool of technology that's going to improve and do what it does better, which is moving around centrally issued assets like stablecoins. So in that regard, does Ethereum need to be as decentralized as it is? Probably not. So here's a strange take. Ethereum is probably too decentralized in the sense that it's not going to be money, and it's tried to be so decentralized that it's actually not optimized for what it's being used for, which is centrally planned financial systems, right? If JP Morgan's going to issue bonds and stocks and stuff, they don't need it to be the most decentralized thing in the world. They just need it to be quick and fast and able to settle shit. They don't need the level of decentralization that Ethereum has made. So in a strange world, it's kind of in the worst of all positions. It's in a valley where it's not Bitcoin, but it's also not the fastest, shitcoin. So it's like, why would you buy it? And I asked this one question. If Ethereum was launched today, would anybody use it? I really struggle to answer in the affirmative for that.
I tend to agree. I certainly wouldn't be that
Tough.
interested in, what Ethereum's done if they launched today. 100%. I think something that a lot of people find interesting is this idea of a power law model. And
Oh God.
I've seen you talk about this
You knew
a
you'd
lot
get a
on
reaction
Twitter.
out of me on this one. Bloody hell.
Let me tee it up for you. What do you reckon? Power law
Yeah.
model. You're a fan or no?
Yeah. Okay. So power law model. First things first, it resembles a lot of the pain and anguish that we went through with the stock to flow model. Um, I will give them credit that there's a lot more grounding anchor to it, right? They've actually done a lot more work. The stock to flow model, just for those who aren't aware, is absolute. I can swear on this channel, right? Absolute dog shit. Absolute dog shit. Anybody who supports the stock to flow model, please stop. It's just garbage. There is no, and the worst thing about it, right, is it's been so debunked, and yet the author will continue to pitch it as not debunked. It's like it's been debunked. Now, the power law model has a lot more mathematics behind it, a lot more work going to it. The problem that I have with it is that it's one of these models where it's markets are not about certainty. There is nothing certain in markets ever. And the fact that this model is being pitched as divine from God certainty is the problem. It's the way this thing is being sold. And the problem is it preys upon people who, what happened with the stock to flow model? People believed it. So what happens is they make life decisions like going levered long at 50K, 60K before a sell off to 29K because they believe that this thing is mathematically preordained to go to infinity. And it's not. It's just not. Markets are too variable. And this claim that it's just divine from God and that it must happen is very dangerous thinking because it's wrong. Like none of us know the future. So it's not the mathematics that's the problem. It's the wrapping and the marketing and the pitch behind it that nothing is certain, and it's going to prey upon very, very new people to this space. It's going to cause the same amount of damage that the stock to flow model did. It doesn't really matter if the stock to flow model was good or bad. It roped a lot of people into a false sense of security because markets are complex and challenging. They're not easy because if they were easy and there was just a model that said we're going to $1 billion, we'd all be a billionaire, but we're not because markets are really, really fucking hard. So that's my concern with it. It's the marketing and the pitch, the claim of certainty. And I think it's, even if it's divine from God and the maths is doing what it's supposed to do, the way you're packaging it up is dangerous.
Yeah, I'm going to be very careful what I say, but I think I agree with everything you just said there, Check. I think a lot of people are going to be looking at these models, and I think a lot of people could make some big mistakes, so to say, if they sell Bitcoin at 120K because it's one standard deviation above the,
You hit a perfect line. Yeah,
yeah,
exactly.
Yeah,
Yeah,
I
or more importantly, they go levered long at 120 because the people who
mm,
are going to come in and be the most affected by it are people who come in and believe it at the top. And
mm,
they look at this straight line projection that basically says, as time continues, Bitcoin go up, and it's
mm,
just not true, right? We don't know that. So, you know, and again, a lot of people are like, oh, hang on a second, this dude does on-chain data. He's also a voodoo
mm,
master. It's like, well, kind of, but at the same time, what I'm looking at is the mechanics, right? And what I will be looking for in my analysis is when all those poor, unfortunate souls who, no matter what you do, you can't help them, they will buy high. What I look for is show me when that happens and then price trades below and they all go from happy days, I'm in profit to holy shit, what was that red candle?
mm.
And they panic. That's bear market material. So that's what I'm looking for is when does that event happen? And I'll see it. I'll be able to watch the damage that any of these models do.
Mm.
And the idea is to essentially be the contrarian and say, well, that doesn't look very good. It's probably time to, you know, if there's going to be a top, it probably looks like that.
Yeah, no, 100% agree. Now, you mentioned it, voodoo data. And I think something that a lot of people think is voodoo data is this idea of the Bitcoin multiplier effect. Now, you made a
Yes.
brilliant video recently on your YouTube channel, which is very, very undersubscribed. So that one will be linked down below. But you're talking about this idea of 118x Bitcoin multiplier effect that's been put out there by Bank of America. I would just love for you to share with the listeners your thoughts about
Yeah, it's bollocks. Anybody that says 100x
it.
multiplier, 50x multiplier is kidding themselves. So what I set out to do is go, okay, how do we actually measure this right now? In the world of on-chain data, what I find so fascinating about it is Bitcoin, and Bitcoin is this very organic, natural phenomena where it's very ground up, very grassroots. The data inside the ledger, as a result, because it's such an emotional asset to hold, and people, I mean, people believe in this thing to the end of the earth, right? So it elicits a very emotional response. Not only the very ripping bulls, the bears, the whole thing. So we get a very clear picture of investor psychology. And the reason that chart patterns look the same in the 1920s to they do today is because the one constant in markets is that the human brain is not designed to succeed. We are designed in markets to lose money. Our natural psyche is not attuned to making money. And as a result, we buy and sell this thing, and the data inside the ledger is full of all of our collective decisions. Now, what's cool about that is you can see when someone buys at $200 and then sells at 2,000. You can also see when someone buys at 20,000 and capitulates at 3K. And each time those coins are getting revalued, somebody else has to come in with that capital to buy that coin off them. So what we can do is sum all of these transactions of profit and loss and essentially come up with a pretty good gauge of how much capital is flowing in or out of Bitcoin at any one time. We call this metric the realized cap. It's like the on-chain market cap. Rather than valuing every coin at the spot price, it values all the coins when they last moved. So Satoshi's coins are worth zero. There's a million of them, but they moved at a price of zero, so they're worth zero. If he spent them today, they'd be revalued to 68K. So now that we've got this framework of actual money moving around on the chain itself, it also filters out all the algorithmic bullshit on exchanges, buying and selling, and just moving coins around. I mean, until a coin is withdrawn, it's one button away from a buy or a sell. So let's just pretend that all that stuff doesn't exist. I only care about people who've withdrawn and really invested that money. So when we look at this multiplier effect, the question is how much has that realized cap? And there's a few other metrics I use to measure it, but how much has that realized cap and various other boundaries moved capital inflow relative to the market cap, right? So what I found is that it's never got above like 8. 8 was like the all-time high, very, very short, brief event. Most of the time during during a bull market, it's between like 3 and 5, right? So, and it makes sense. You don't invest $1 and suddenly $100 come out. That's bullshit. That's just not how it works. And people have to remember this multiplier effect, whatever it is, it works in both directions. So if somebody is selling, right? If you're in a bear market and somebody is selling $10, then it's going to have a $50 impact to the downside. So it works in both directions. But essentially, show me the real, true, measurable on-chain capital flows. Compare that to how much the market cap changed. And what it comes out to be is very consistently between about 5 and 6x between at the peaks of bull markets. And then it decays a lot during bear markets.
Yeah, brilliant synopsis. 3 to 5x sounds very realistic. It aligns with everything I've seen. The biggest red flag for me was that the one article I found talking about this multiplier effect, it was talked about by Bank of America in an article where they were bashing Bitcoin. The title of the
I
article
know.
was, yeah, it's like, I don't know,
Yeah. I
118x.
don't know how, and that's the thing, right? That's what I love about Bitcoin is you can go and look at some of these traditional finance bros and you look at their analysis and you're like, what school did you go to? This, how the hell did you come up with this mathematics? It's just wrong.
Yeah.
It makes absolutely no sense whatsoever.
Ah, well, it's good to maybe clear that up for some people because I still get questions weekly saying, oh, but the multiplier X is 100, doesn't this mean Bitcoin's going here by 2025 or yeah. I think that was good that
And
we
it's also
cleared.
there's also like the smell test, right? Because in a bear
Mm,
market, the multiplier is much lower. Sometimes it's less than one, which makes sense. You've literally got an oversupply of coins. You've got too many coins, so you need to put $10 in to get a $1 change in the market cap. So in that regard, like it just for the core smell test of how I constructed the model, it makes sense. You see periods of oversupply and you see periods of supply scarcity, which is a bull market, right? There's not enough supply and price goes up.
yeah, 100%. Now, switching gears to a completely different topic. I think the first time I ever met you might have been in America or it might have been in Mexico. I can't remember, but you're a fellow Australian who also temporarily escaped and you lived in Mexico for a period of time. So I'd love to just hear your thoughts about, living overseas and what was Mexico like? Was it as dangerous as many people in Australia believe it is?
No, not at all. I mean, I've lived overseas twice. The first one was before the pandemic when I was in London, which is obviously not too far removed from Sydney in Australia. But then after the pandemic, I think me and my best mate, we were the first people out the door. Right, they opened up they started flights again on like the 1st of February, and I think we're on a plane on the 4th. So we were get us out of here. We just I need to go and do something different. And anyway, one of my very good friends, Dave Puel, who wasn't actually a very good friend at that point in time, just an on-chain acquaintance. Dave Puel's one of the original on-chain guys, right? He's kind of the dude that, there's probably very few people, 8 or 9 guys who came before me. And then I kind of got in based on their work and their research. So Dave's been around for a long time, works for ARK Invest now. And for whatever reason, we were trying to organize an on-chain meetup, right? Get some of these guys in the same room. And it turned out that it was basically me, Dave, and TXMC. They were the only people who actually showed up. So anyway, we started hanging out with Dave in where were we? Playa del Carmen, which was great, and a bit of a tourist spot and whatever, just kind of acclimatize ourselves. But then we spent a bunch of time in San Miguel de Allende, which is like 4 hours by bus, right in the middle of Mexico from Mexico City, and just an absolutely spectacular part of the world. Loved every moment of it. This fantastic. In fact, if I can leave the audience with one thing, there's this tiny little pizza place, little family-run place called El Castillo, which is absolutely fantastic. The best pizza and pasta I've ever had in my life. So me and my mate, we lived there for about a month and a half. And then I think we went to Miami. Maybe that's where we met for the conference. We spent a bit of time in Portugal and Europe. And then eventually we decided to go back because it was just so fantastic. And we had to go and get that pizza again. And we were there for about 2.5 months. And I mean, I honestly felt more at risk in Lisbon, in Portugal, than I did in my entire time in Mexico. Now, granted, you could literally go to Juarez and you'll have a horrible time. But if you don't go looking for trouble, right, you're fine. But I loved it. I thought Mexico was absolutely fantastic. And we were talking before we started recording. I left Mexico saying, go long this country, like
Mm,
everything about it. What I loved about it actually is it's very grassroots capitalist in the sense that everybody works their ass off for like they earn their tips.
mm,
And then I come back to Australia and no one even deserves the salary they're on, let alone a tip, right? The service you get is just absolutely dog shit. Everything is just going downhill. But in Mexico, they work their ass off for it and you can feel it and you can feel the competition and that's good. And, granted, they're obviously less well off than Australia is, but you can kind of see how like being fat and happy for too long actually degrades people's work ethic. Whereas when I left Mexico, I was like, go long. And the peso is like the only currency that Bitcoin has an all-time high against because it
mm,
has literally been so strong. So in many ways, that kind of gut instinct of go long Mexico, there's obviously going to be all the the onshoring, right? America's like, yes, we need to bring all of this work home to
mm,
Mexico because they're never
mm.
going to pay Americans to do it. So it's this very interesting global dynamic, but it made a lot of sense having left the place.
Yeah, it's a magical part of the world, Mexico. I think I've been there 3 or 4 times and I've loved every trip for different reasons. And like you say,
Yep.
not as dangerous as most people think. I was getting around in Guerrero down because my buddy was speaking at Anacapulco, some shitcoin conference. So I went and watched him, and it's honestly not as dangerous as many people think it is. But maybe switching back to on chain, check you're doing your own thing these days. What exactly
I
are
am,
you
yes.
doing? Tell me more about it.
Yeah, so Check on Chain is the project. Check on Chain's actually been around for a long time. I probably one of the earliest on-chain data platforms, and it was. I mean, I've always just pulled data from all sorts of sources. They're all free, and it's just about me kind of creating all the metrics and ideas. Because what I love about on-chain data is I get to see and visualize what the investor base is doing, and there's so much information in there. A lot of it's noise, but it's about finding where that signal is. I spent 3.5 years leading the analyst team at Glassnode, and through that journey, I just had this itch that eventually I had to go and do my own thing and write my own newsletter. And what I love about it is I get to share my opinions. Right, when you're doing it in a more if in a company setting, you can't really share your personal views. It's a different kind of animal. So a lot of that was very formal, technical. This is what this metric does. This is how it works. And we were designing them, right? A lot of these metrics didn't exist when I started at Glassnode. The mission was we've got all these metrics and no one in the world knows what they do. So I was like, all right, I'll work out what they all do. And I started to filter out and see what metrics did and didn't work and how they describe different parts of market structure. Huge learning experience. But eventually it was time for me to just go out on my own and actually turn this into my own product, right? And essentially the newsletter is how I do that, right? It's about sharing my opinion. It's about exploring these ideas. As with a lot of newsletters will say, hey, we're going to predict the future. Speaking of power laws, I think that the pitch is that we're going to predict the future. um, I have no idea what the future is going to do, right? And to me that's a really important grounding anchor. I don't know. And I think coming at everything with that perspective of I don't know, but we're going to try and work it out, right? And we're going to try and analyze what's going on. Is just a really valuable angle. A lot of people really enjoy that. So it's a combination of me explaining what the tools do. We have like a masterclass, right? Ground zero. What is the realized cap? What is MVRV? How can you actually use these as a hodler? But also a lot more advanced analysis where it's actually me using the tools and my experience to go, well, where do I think we are, right? How do we come to this conclusion that we're not at euphoria yet, or that we're volatile, we're not? How do you come to these conclusions? And essentially, my newsletters are a bit of a worked example, exploring my thought process, how I go through the journey of actually looking at the data and understanding it. It's been an absolute. We've been 5 or 6 weeks now that we've been live, and it's been a fantastic. I mean, the response has been fantastic. I'm loving every moment of it, and I get to just do me, right? And I love to write. It helps me process and think ideas. So yeah, it's been good fun.
I've been following them pretty much since the first one you put out there. So I have been enjoying them over the past 5, 6 weeks, and I would encourage everyone listening to definitely check them out and check out the amazing videos you're doing on your YouTube as well. And if people do check those links out in the description of today's video and they have any questions for you, Check, where can they fire those questions off to?
Yeah, absolutely. I love questions. So you can, I mean, any comments on the YouTube channel, I'm always answering things there. You can ping me on Twitter. You can jump in a Substack and ping me there. I'm pretty open. I've got all my DMs are open. So let me know if you have any questions. Happy to answer.
Okay, I think that's a great place to wrap things up. Thank you so much for your time, Check. We hope you enjoyed that interview with Checkmate discussing all things on chain and the Bitcoin power law. If you want to learn a little bit more about those topics, we recently had an interview with the creator of the power law theory, Giovanni. If you want to watch that video, you can check it out right about there. And if you want to actually take a different look into the Bitcoin power law and find out why it is actually already failing in different fiat currencies, such as the Argentinian peso or the Turkish lira, you can check out the video I filmed on that topic. I'm going to pop a link to it right about there. And with all that said, thank you so much for tuning in. Let us know in the comments what you thought of this one, and we'll see you in the next one.